So tell us about the most recent Royce research article.
Our most recent article is based on peer groups, specifically how the Morningstar peer groups have changed over time. We get a number of questions through due diligence about which peer groups should our different voice funds be compared to, and why sometimes, when we say that it's a certain kind of small cap fund, that it doesn't look the same in the Morningstar style box or the Morningstar category, and also the Morningstar peer groups.
So Morningstar does have peer groups, the categories and styles. What's the difference between them all?
That's a great question. So the style box is, the most common graphic that you see that Morningstar puts up, and what that is that's a point in time snapshot of where your portfolio's holdings are aggregating as a centroid onto that particular grid. And when you look at a category, what that is that's a 3-year look back at where all those style boxes have been. So they aggregate those and they come up with your category, and your category is what determines your peer group. So your peer group and category will always be the same, but your style box may be different.
Well, how can there be a disconnect sometimes between where advisors think our funds should be and where Morningstar places them?
Well, there's a number of different reasons why there might be a disconnect. Morningstar's process of putting a fund into a category or style box is completely formulaic. It's based on your holdings.
It's a snapshot.
Correct. They don't actually ask the portfolio manager, where do you think you should reside? This is based on the holdings. So as a result of that, where you think you should be might be different based on where your portfolio currently is in terms of the evolution of the market cycle and evolution of an investment thesis. And also, it's a comparative computation, so it could also be based on the fact that everybody's doing something else differently.
So you did a deep dive into the small cap category. How did you compile that data?
What we did to compile this data is we tried to actually recreate what a Morningstar category looked like 10 years ago. So we were looking at just the small cap categories for this exercise. And so we looked at all funds that were in small cap blend or value or growth at year end 10 years ago, adding back in all the liquidated funds and all the merged funds just to create a picture of what that would have been. And we did that for 10 years ago, for 5 years ago, and for 3 years ago, then compared it to today.
And what stood out in the results?
Our results were actually really interesting. We were surprised to see the degree of flux that takes place in Morningstar peer groups. For example, in the small cap value category that we looked at, we found that only 33% of funds stayed in the same category over a 10-year period of time.
Now, does that change over shorter periods, 3 and 5 years?
So we looked at shorter time periods as well. For example, again, in small cap value, we found that over a 5-year time frame, 48% of funds stayed in the same category, and the rest of them had actually moved or been liquidated out of the category. And over a 3-year period, across all 3 categories, we saw only about 75% of funds stayed in the same place. So that means 1 in 4 funds actually move out of that category over a 3-year period.
So given the amount of flux you saw in your data, how are investment advisors effectively able to compare funds within peer groups?
So one of the ways we'd suggest is, instead of looking at just the Morningstar defined categories of blend and value and growth, to create larger categories. And that's something we do here at Royce. We create a much broader category and compare our funds to, say, all small cap funds.
So could advisors create custom groups as well?
Absolutely. That's a great example. You can create custom groups in a number of different ways. You can use a combination of holdings-based, style-based analysis. I would also suggest asking the portfolio manager, where do they think they should be in a peer group, and using that to create custom peer groups.
Can you give us an example of a custom peer group?
Sure. For example, if you were trying to evaluate a dividend-oriented large cap strategy, you could compare it to the Morningstar category it's in, which would probably most likely be large cap value, and you'd be subjected to some of the flux issues that we see with comparing funds within a category. You could create a custom category of all dividend-oriented large cap funds and use that instead, and I think you'd find the results would be a lot more accurate.